Welcome back. At 7:43 now, the ongoing conflict with Iran and the surging cost of oil is filtering into all other industries, and Americans are feeling it, from plane tickets to shipping packages, fuel for cars, diesel for trucks, to put price to food on the table. Joining us this morning to break it all down is financial advisor Ernie Burns. Good morning. How you doing?
Good, good.
All right, so I mean, look, a lot of fluctuations that we've seen in the market over this week, the past couple of weeks. It seems like everything right now is tied to what's happening in Iran and in the Strait of Hormuz. What's your take on it?
It is. The energy is, when energy is constricted like that, oil prices shoot up, which causes gas prices. This is a little different than what's happened over the last 30 years, though, because with Israel and Hamas, and then our Russia and Ukraine war. Really, the markets didn't have a big effect in any manner. This is affecting markets solely because of energy.
Right. I mean, it's a big indicator, especially when you consider 20% of the world's oil is coming through the Strait of Hormuz. What can people who are investing look at? Because you want certainty right now, and we're in a lot of uncertainty, right?
Yeah. Big thing is eliminate the noise. Eliminate the noise. And if you bought on the dip, it's a win-win. We have about 8 good days of the year that are huge returns for the market since the beginning of the market itself in the mid-1800s. And if you miss those 8 days, you miss out on probably 80% of the return. Well, we had one of those on Wednesday. So eliminate the noise. If you're very positive of how you're investing, then look at opportunities in the market. And if you're investing correctly, this is just managing the market at the right times and not having a news flash change you or stress you out.
Right. You're kind of talking about it right there. If I'm someone who's looking at it and looking at kind of potentially even trying to time what's happening, you see stuff go down, you take your money out for whatever reason, and then you're not there when this big jump comes earlier this week. Like you said, you don't get that return. So would you suggest people keep things where they are and then identify opportunities to build and add?
Try not to time the market. That's why we're not trying to buy and sell all the time. If your strategies and if you've done your homework, you sat down with your financial advisor, you know how you're invested correctly, just manage these times.
Right.
Just eliminate the noise.
Okay. So, as we look forward here, people are asking about interest rates. Do we think that, we could see them cut again? There should be a new Fed chair coming soon.
Well, it depends what's happening in the Middle East right now, which sounds strange, okay? CPI came out a little while ago and it shot up for February to 3.3, a little higher than expected because of oil prices and gas prices shooting up. If this gets settled in the next couple of weeks, oil prices are going to dip dramatically, which eliminates inflation worries. In other words, keeping inflation or keeping rates where they are. It will eliminate that theory. In the same instance, if it's reduced in the sense of we have oil going through the straits, everything's eliminated from this, or the majority of the war, then you're going to see interest rates probably have creeping downward later this year. Couple cuts. That's a huge plus for the future. And the market is just holding back so much currency right now. There's a huge possible bull market at the end of this year. Okay.
All right. Well, something to certainly look forward to. If you've been looking into the market right now, just hold on. If you have those questions, ask your financial advisor. Thanks so much. We appreciate it.
Thank you.
All right. Time now, 7:40.